Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, December 12th at about 1:30 p.m. Eastern. Well, the S&P is pulling back a bit from record levels today as investors continue to exit technology stocks and move into value areas of the market. This morning, the S&P 500 and the NASDAQ were bogged down by a 10% drop in Broadcom, which some analysts think is because of margin compression worries. That's even after the company beat fourth quarter expectations and gave a strong forecast for the current quarter, saying that artificial intelligence chip sales look to double. Well, that's pretty good. So on that note, let's go on to three charts that could give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $682 and change, just below its October all-time high up here at 690. Now, we can see here that the 20-day, the red line, and the green line, the 50-day moving averages are just below price down here at 676 and 675. We also know that down here the black moving average is coming in at 620. Now we know, and you can't see it on this screen, but we know that the SPY, like everything else, it seems like in the market, took an April 7th dive. It dove down to its lows at 482 for that day, then rebounded and gradually climbed higher, walking up. It's pretty much up its 20-day moving average to the October all-time high up here. From those April lows to the October high was actually a 43% gain. Now we know it fell down to the 50-day moving average from there, rallied back up here to 685, then fell through both moving averages down here to 652, and I believe this October low kind of helped it right here. So it was price support for that. Rallied back up through both moving averages here, up to about 682, where it is now, up 683, 684. And of course, notice how it came back up to these highs here at this pivot at 685, but couldn't go over it, so far at least. And so we're down again today, as I said, at 682, right above these moving averages. Now, going forward here, the big question is, in the next couple of weeks or maybe first of the year, can the SPY break above 690? Can it actually get up here and break definitively above 690 and start a new uptrend? It hasn't broken this trend yet, but can it start a new uptrend of higher lows and higher highs? Can it do that? Does it have the strength to do it? Now, we do have potential price support, as I said here, at the 20-day and 50-day moving averages at 676, then down to the 652 low. We have the August pivot here at 619. We have the 200-day moving average coming in at 620, and then, of course, on down. It's going to be interesting to see in the next couple of weeks. And you know, it's before a holiday now. A lot of traders are gone through the Christmas holiday and the New Year holiday. But after that, it's going to be very interesting and exciting to see if this market can start higher again. Or are there too many worries about some of the tech valuations and prior reasons, as I said at the opening of this? So be interesting to see. A lot of, as we said, a lot of traders or investors are moving into value stocks, healthcare, so forth. So we'll see what happens here. The S&P has traveled quite a price staircase this year, very impressive. So right now, I'm staying neutral. And next week, we have a lot of economic reports coming out, including the CPI, that's the Consumer Price Index, the jobs numbers, which are very important, the Philly Fed Index, which is important, and the PCE. So with all that going on, it'll be interesting to see how the market acts. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. This is the exchange-traded fund that closely follows our NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. Of course, it includes the Magnificent Seven, Meta, Netflix, Alphabet, Apple, Tesla, that whole group. Now, when I captured this chart today, the Qs were trading at $616, just below the Qs October all-time high here, up at 637. Now, the Qs today are standing at top. They're 50 and 20, and 50-day moving averages, just standing right on top of this line. So far, it's holding it up. So the line here, the 50 and 20-day are coming in at 613, and I said the Qs are coming in at the moment at 616. Now, and also down here, the black moving average is the 200-day moving average is coming in at 550. Now, we can't see it on this chart, but we know that earlier in the year, the Qs rolled over and dropped to the April 7th low of 402, then started rebounding, and pretty much like the SPY, the Qs walked up its 20-day moving average. Of course, it's always a lot more dramatic than the SPY with its up and down moves, but pretty much walked up its 20-day moving average until the first week of October. Right here, it lost a little of enthusiasm, but then popped up here and kept on going and moved up to, I'm sorry, the October move down was up here, and then moved back up to this all-time high at 637, then back down here to November lows at 581, then rallied back up to its moving averages to where we are now. So you can see as it walked up in June and July and August, and it had walked up since April, you can see how it started to struggle here in August, started to struggle here in September, started to struggle in October, and then in November it struggled again, but it held on and kept going up. And can it keep going from here? So, but the run-up, by the way, the run-up from April lows up to October highs here was 49%. So that's very, very good. Going forward from here, we have resistance from the November pivot at 625 right here. So you notice it tried to get over 625 and couldn't do it. And then, of course, up to the highs at 637 is resistance. We have potential for support at this 20 and 50-day moving average at 613. Again, we have the November lows at 580 at 1. And we have the the August and September pivots at 552, 559, if I can get that right. Then we have the, that's not a very straight line, is it? Then we have the 200-day moving average coming in here at 550 and on down. So again, next week we do have a lot going on. It's going to, if you have a lot of tech stocks that you're holding right now, it might be wise if you check in on this QQQ and see what it's doing. So it might be a good idea to do that, and also to keep an eye on your protective stops. Our final chart today is a daily chart of the ARK Space and Defense ETF, the ARKX. That's the Space and Defense Innovation, I forgot to put that word in, ETF. It has 32 holdings. Top holdings include Teradyne, Kratos Defense and Security, L3 Harris Technologies, Rocket Lab, and so forth. Now, when I captured this chart today, the ARK was trading at 29.08. You can see down here. So far, right on top, just trading right at its 50-day moving average, right on it, just a few cents. Price is just a couple of cents under the actual 50-day moving average at 29. So it's right there. The 20-day is underneath. The red line is inverse to it at this point in time, trading at 27 and change. And we can see down here that the 200-day moving average is coming in at 24 and change. Now, I've been watching this ETF for some time, and I think it's interesting. It doesn't trade in direct correlation with the stock market for obvious reasons because of the kind of equities that it holds. And so, but it's usually very orderly, which I like. And it's been bullish for a while, but not in a terribly dramatic way, which at the moment, anything that isn't frantic really can kind of appeal to me. So in April, it made an April low, which you can't see back here at 15. Then it rallied and walked up like most. It rallied and walked up its 20-day moving average up to the July high here at 27. Then fell down a little bit and started consolidating along its 20-day moving average, then fell down here to the 50-day and started walking along that. As tech stocks were moving a lot higher and money was pouring into them, this was kind of just kind of dallying along here, moving sideways at around 26, 27. In September, it started higher here, and as you can see, made an October high at 32. Then it slipped down a little lower, tried to pop up, couldn't do it, and fell back down here. It came up here to the October high at 32, then slipped down to prior price support here at 25, 26 right here, and then headed up to where we are now at 29, okay? So that's where we are now. So while space and defense are definitely going to be using AI, this ETF, as I said before, is not as frantic as many others in the technology arena right now. This ETF too, even next to the market and the SPY and everything, it tends to kind of go its own way. And again, I like the fact that it's orderly and has been gently going up for quite some time, ever since its inception, really. So in the coming week, if the market is behaving reasonably well, and if the ARKX can climb above, is on the 50-day, if it can just get up and over that 50-day moving average toward 30, I will buy a small position in my trading portfolio, and I'm going to put my stop down here at 26.50. That may be too low for some of you, but I'm going to give it a little bit of room here, as I would like to keep it for a longer-term trade if it works out that way. Now, if and when the ARKX closes above 32, which is its all-time high up here, I will add to my position, and my stop, of course, by then will be a trailing stop. So you may want to keep an eye on the ARKX in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, How to Bottom Fish Like a Pro, which is down here at the bottom of this list, you'll discover a simple yet profitable strategy that all traders and investors want to know: how to buy low and sell high. You knew that, right? How to buy low and sell high. I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see, certain signals that the uptrend is about to end, when to take your profits. Our new low price for this program is only $199. And by the way, some of my trainings listed here are priced at only $59. When you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading, which is right here, to How to Swing Trade Successfully, definitely one of our most popular, How to Trade the Trend to Profits, I love it, How to Read Charts, great for novices, 3 Winning Setups, great for short-term traders, and How to Bottom Fish Like a Pro. Discover how my online training programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.